So institutional investors are looking for three main things. They're looking for inflation protection, they're looking for higher yields, and they're looking for diversification. On inflation protection, I mean, we've seen or recently undergone a period of high inflation, and hence that is at the top of investors' minds. Infrastructure is an asset class that naturally provides inflation hedging, because the business models that we see within infrastructure have embedded contractual or market positioning arrangements that then allow ultimately those business model to pass on that inflation risk. The asset class is well suited to handle that inflation concern. And then on the higher yield side, well, we've seen interest rates rise, and then we see also investors that with that then are comparing their options on the public markets to the private market space, and they're expecting alongside debt products to also equity returns to keep up with those developments. And we believe that the infrastructure asset class allows that because of this embedded inflation protection, and also because of the long life that the underlying assets within the space have.
And when we look at diversification, clearly a lot of institutional investors have experienced like a number of tail end risks over the last years. It starts with the pandemic, then the supply chain disruption, and then also the energy crisis together with the war. These tail end risks can really catch out like an individual assets or like a smaller portfolio that are more exposed to like either one of those risks. So I think that has clearly shown the benefits of a broad diversification across like many sectors, many geographies, and also like many underlying portfolio companies. And that is like what our strategy is also focusing on. So like a very broad, a very diversified portfolio ultimately. And I think the last point that is also like on top of investors' mind is ESG at the moment, and has been building up over a number of years. But I think by now, like we have moved like far past the point where it's just about mitigating the risk of a stranded asset or like other ESG risks. But it's really about building portfolios with positive ESG characteristics. And we have been doing that over the past couple of years already. Like we have a strong focus on ESG, and that is completely integrated in our asset management and investment processes already.